Hey, good morning, good afternoon, everyone. It's Trendy John from Simpler Trading. I want to go ahead and get started with this week's broad market analysis. Before we do that, I just wanted to say thank you for your support. Thank you for always watching these. Thank you for your kind words. Thank you for reaching out. And most of all, just being you and allowing me to give you this information every single weekend. Before we get started, please hit the like button and share this with any friends and family who may be interested in some sort of analysis going into this week's market. So, here's the theme that I'm seeing right away. We're going to get started with this week's market major economic reports and Fed speakers. And when I say Fed speakers, I mean it. There's a ton of them this week, which makes me feel like there's going to be a lot of noise, a lot of chop, and a lot of volatility. And there's a couple other reasons why I believe that, and I'll see that or I'll show you that towards the end of this video. Let's go ahead and get started. So on Monday, February the 10th, the day after the Super Bowl, when most people are not as productive as they should be because they're out partying pretty hard on Sundays. So I don't know about you guys, but we have plans as well. We'll be going around the neighborhood. There's about 3 or 4 different parties. Whether football is your thing or not, my favorite thing about it is just being able to, hang out with our friends. On Tuesday, February the 11th, we do have some. All right, we have Cleveland Fed President Beth, Chairman Jerome Powell, San Francisco Fed President. You get it. There's just a lot of talking heads, a lot of noise, a lot of chop, and it starts first thing in the morning. Over here on Wednesday, it gets a little bit more interesting as we come into the CPI year over year, core CPI, and then again, lots of Fed speakers towards the middle of the afternoon, and then ending there with Christopher Waller. On Thursday, February the 13th, initial jobless claims gets a little bit interesting. Then we have core PPI. And then on Friday, import price index, US retail sales minus autos, and so forth. And then ending the week with another Fed president. So again, guys, coming into tomorrow, there's nothing going on. And then we start to get ready with a lot of noise, I would say, a lot of talking heads coming in on Tuesday. As far as the earnings calendar is concerned, I think it's lined up. It looks beautiful. This is actually probably one of the most exciting weeks for me. We have McDonald's coming in here, and then we have Shop, we have SMCI, Upstart, DoorDash, Lyft. The list goes on, and I'm using Earning Whispers here on X, and this is where I like to go for my information, understanding who is going to report. Now, I personally have some of these names in my long-term account for option leaps, like John Deere, McDonald's. Okay, and so these are very important to me. But I just want while we're sitting here talking about it, this is just a news catalyst, and I'm not fully allocated in any of these positions. And if we get a pullback, what I like to do is go ahead and add into those league positions. These are charts that I really like on the higher time frames, and I think they could do really well going into the end of the year. All right. Of course, Robinhood looks amazing. You guys know that we absolutely did well there. I sold my in the money calls and kept some out of the money for as far as leaps are concerned. Reddit, everybody knows this thing has been absolutely on fire, so I'll be interested to see what they can do. And then Coinbase, Twilio has obviously been on a really awesome trajectory to the upside. DraftKings, Applied Materials, this will be interesting. And I know there was another, here we go, App and APP. Let's see how they do. Lots of great names this week. And again, I just think that this week so far is probably my favorite because some of the big names, they just kind of get boring after a while. So there's a lot of potential here for this week for some big movers. Let's go ahead and move down. And we are going to get into the bigger picture. And I'm going to use TradingView for that. And let's go ahead and pull that up. All right, so each one of these, the candle represents a quarter. So again, big picture is where it's at for me, and you guys can see it looks very, very bullish. And if there's an opportunity or later in the year, perhaps if price ever comes down into this cloud, I'll be looking to get long. My notes as far as this week are concerned, this past week, price rejected the weekly trendy edge and closed below the 23.6 fib from the last 4 weeks. And I'll show you that here in a second on my Thinkorswim. Even after Friday's sell-off, price stayed above the weekly 9 EMA indicating that the range I measured is still in a bullish channel of the past 4 weeks. This week, my two major levels are 607 and 597. The 597 represents the 38.2, and if price falls below this, then SPY is no longer in the bullish channel of the keyword last 4 weeks. Because the big picture, we are in a bullish channel as long as 572 holds. Okay. If for some reason we break down below that 38.2, it is possible this week we could see 593 to 588. Let me go ahead and show you what that chart looks like on Thinkorswim. So what I'm talking about here, the Fibonacci is from a 4-week range. I basically anchored my coefficients from here to here. I'm measuring this trend there. You guys can see it did drop below the 23.6. It's still above the 38.2. The weekly candle is still closed above the 9 EMA. So regarding just all of that information I gave you, it's actually still extremely bullish. Things look great. Friday was just a sell off. And if it continues down, obviously, I'm saying that we could see levels further down. Now, you'll notice that this would be considered, in my opinion, a secondary um, Fibonacci's, and then my primary is coming from a much bigger range. And the reason why I do this is because I feel like when traders see a big pullback, um, let's say like the trend continues and we go down the next couple days or something like that, and we start breaking down below some of these key levels that I gave you, it's important to understand the big picture. All right. The very big picture here is we're in a beautiful rally after we made that high in December. And then we came up here, we made some highs as well. Price is just basically going sideways. And this is what we predicted. I mean, honestly, this is kind of what I expected after such a bullish run over the last year and so forth. That price could slow down major, and then perhaps even pull back to major levels. But for right now, it's just a lot of consolidation in a bull channel. So when we look at the primary, okay, coefficients, and we're looking up here, it's very important to understand, as I said in my notes, that as long as we're staying above the 572 level, the 38.2, this overall trend is still extremely bullish. So therefore, if it's overall bullish, I'm still a dip buyer until proven otherwise. Let's go ahead and move on. We're going to now look at the Qs. So we're going to pull that up on a quarterly chart, and it's going to look a lot like the SPY, okay? And the notes right here, let's go ahead. Last week, price held our lower level and rallied to the monthly edge. I'll show you that here in a second, where it stalled. Friday, price pulled back to the yearly edge and held. The yearly edge, which is $523, is a big over under for this week. The two major levels for me this week are 529 and 512. Let's go ahead and take a look over here at the Qs. So on the Qs, same thing. We have a primary. You guys can see that over here. We have our primary Fibonacci's, and then right here we have a secondary, if you will, and we're looking at this trend. You can tell that again, just like the SPY, after making a high, things are basically just coming in for digestion. And the thing is that anytime we digest, anytime that we're chopping, I find that it is very difficult to trade. It's easy to go out in hindsight and say, hey, you could just sell credit, or it's easy to go, hey, things just went sideways. But sometimes as traders, we're stuck in the moment of the idea that, perhaps we're going to get this follow through like this. Okay. I don't ever want you guys to think that trading is easy. I'm very transparent and I can tell you it can get very difficult. I personally think that these kind of situations here are the most difficult in trading, and that's obvious because you're not getting the moves that you're expecting. We're basically just getting a lot of chop. And as you all know, depending on what side you're on and what tariff information hits X, you could find yourself at a disadvantage. So be careful when prices are chopping. The big picture is if we can move back above here and create a base, then things can move up and will trend and break out and things will look great, right? The other thing is I love dip buying. I love dip buying when things pull back into demand zones. And right now, the demand zones that we're using are on very small time frames. These aren't big demand zones. Levels are holding, support levels are holding, but again, it's just consolidation. So please, please understand that. Notice here on the Qs, I have two major levels. And those major levels, there's a trendy edge here at 529. And then I have the 618 here at around 512, 511. This was your level from last week as well. And you can see we came in there and it held very nicely. This is important to me because the 23.6 on the primary and the 618 on the secondary, they basically match up. And so at the end of the day, I just want 511 and a half to hold. And if that can hold, then things still look great to the upside or continue chop, as I would say. Let's go ahead and move on to our next chart, which is going to be the DXY or the dollar. Okay, let's go ahead and minimize that. And over here on TradingView, DXY, we're going to go into a weekly chart. And, the levels speak for themselves. My job is to identify and show you how to find the levels, and then we execute using the strategy that Melissa and I teach you. Notice that the supply zone is working really well. The cool thing is, again, supply and demand is not an indicator that moves. You identify the structure and then you teach a process around how to execute it. I love that. There are some moving indicators like this cloud, right? This is to help us stay in trades. But one thing you'll notice is that this zone, if you've been watching me for months or weeks, or maybe you've been with me for years, is that the zone hasn't moved in quite some time, but we knew exactly how to feel about price when it pushed into the supply zone. We expected to reject. And when prices come down to demand zones, we expect prices to then push to the upside. You'll notice that this past 2 weeks, if you look here, these zones have worked very well. And really, it's been about a month. But notice here, we're just kind of chopping between the two. So, my overall sentiment on the dollar is not to really be overly concerned unless for some reason price were to move above 111 or if price starts to break down below this demand zone, which happens to be around 104.83. So really, at the end of the day, what I'm saying is you're just stuck in here. We're getting the fluctuations. This is exactly what we're seeing in the market. It's just volatility and it's chop until it's not. Let's move on now to the TNX, the 10-year Treasury. Why do I like watching this? Well, when we put all these type of things together, we can really understand what to expect going into the next week. So far, you can see that the dollar is pretty neutral. It's just ping-ponging between supply and demand. And then on the Treasury, it's the same thing. We had these same zones for a very long period of time. We expected them to reject. We expected the TNX to find bids here. You can see that. Therefore, all of the noise, all of that on the outside doesn't really bother me. I'm focused on the levels and that's it. So, what do we do about the 10-year Treasury? What are we looking for? At the end of the day, technically, I do see this moving back towards 3.8 and below into perhaps June and July. For now, though, caution is warranted in the overall market. Investors are still very weary, right? We like to understand and feel a little bit more confident what's going on and believe it. And I think you all know this. There's just a lot of noise out there. And so continue to be basically on your toes. Understand that volatility will stay as long as we are ping ponging between here. And just like all the other charts, things don't really get clear until one of these levels breaks. Okay. So, again, until one of these levels breaks, I believe that we continue to see volatility in the market. The skew, this is the next thing that I want to read to you guys and go over with you. How do we use this in traders? Traders might use the skew index to adjust their portfolios, like I do. If the skew is high, one might consider buying protective options or what we call insurance, reducing your risk exposure. So, what I mean by that is if you're net long in your portfolio and you're just trying to reduce some of the risk, you can look to buy some insurance puts when things are extreme. Well, one thing that we noticed over the last year and a half is that we are living in a different time. And the reason why I say that is because when you back up the skew, you can see that the information has worked really, really well over a long period of time. If you were to just draw a line, we used to always say, hey, this is where you want to be careful, and this is where you want to be risk on. But you'll notice that over the last year and a half, we started to live above those levels. And we identified that very quickly. And because of that, things changed for us. Now, this year, it's even crazier, in my opinion. You're just making, look at this, if we were to just draw a trend line here, we're just making higher lows, which is pretty nuts. Because when the skew is extreme, you're protect risk off. We are living in an environment where it's extremely high. The volatility continues to increase, the amount of noise continues to increase, and therefore we're just stepping it up. We're stepping it up, right? We haven't seen these levels in quite some time since 2023, which used to be a norm. And then early on, we started to notice this was the bottom, which back in the old days was extreme. You wanted to be protect or risk off. And then look at this year. We're basically living in this area up here, which is like, you heard the term like walking on eggshells. That's really what it feels like. So prices are very elevated. And please understand that means extreme caution. And a lot of times, puts 30 to 90 days out will pay. Remember, while the skew is a useful tool for gauging market sentiment and potential risk, it's just one of many indicators that I'm showing you. It should not be used in isolation for making a trade decision. So I don't do that. That's why I use all the charts that I'm showing you. And then at the end of this presentation, I'll talk about my sentiment and why. Let's go ahead now and move on to the fear and greed index. And again, before I do that, we are in extreme caution area. This is a red flag area. We're right there. That's where price is. And again, when we're in these areas, we're looking for the SPY to typically break down. Now, before I move on, Friday had a big pullback. That's kind of the things we see. It's like this extreme move. It doesn't last very long, and then we pop, and then people are kind of like again stuck in this reality of just volatility in the high range here. Okay. So fear and greed index, where are we going into this week? We're at the 39 level, which equals fear. When levels start to break into the fear, what happens? Participants like you and I start to buy more insurance. We start to get a little bit more fearful. Why this is really important with supply and demand is because a lot of times as we creep into the fear and extreme fear, we're actually moving down in the market into demand zones. Okay. And as I always say, most people tell you to be fearful. And this is even professional traders. They don't necessarily have a plan when prices are going down. They'll teach you, hey, you don't want to buy high, you want to buy low. But when price gets low, then they tell you to sit on your hands. To me, it's absolute nonsense. I want to buy when prices are going down into what I consider clearance racks. Okay. Now, not all the clearance sales work really well. Sometimes people come out with lower prices, right? So every once in a while that can happen. So I want to make sure that everybody understands that some of my trades are very, very long term. I'm not looking at 5-minute charts. I'm not even looking at daily charts or weekly charts. My focus might be quarterly charts and yearly charts. That makes up, I would say, a small percentage of my portfolio. And then I have a focus from intraday trading. And that's where at Simpler Trading, my SPX room is more based on a shorter time frame. And then in the trendy trading room, we have everything from swings to intraday to long-term trades as well. And that is futures, that is also options, and that is also equity. Okay. So again, guys, we're just putting all this together and getting an idea. And now we get to one of my favorite parts, which is going to be the futures. So we're going to pull up this chart and let's go ahead and go to ESH25. Now my overall sentiment for this week, and before we get started, again, guys, if you haven't hit the like button, please do so. I really, really do appreciate it. It's kind of like a currency to make me feel like what I do on my Sundays is worth it. So just 1 second to hit the like button, make sure you subscribe. I really, really do appreciate it. On the weekly side of the ES futures, not much has changed. The only thing really that I want to do here is show you that proof of concept works. Last week, if you watched, you knew this was a supply zone. you know that we want to be cautious when prices push into the supply zone. You'll notice here there's a purple line. That's a trendy edge that was there before price got there. It is a identifier of a supply zone. And you'll notice that it worked really well. You'll also notice last week I gave you a bull channel. This is where I expected buyers to show up. Last week, price did come into the bull channel, and you can see it did work. A couple things to take from this chart is that price did close above the 9 EMA. That's a good thing. So we're stuck, once again, between two opposing levels that are working well. Hint, what else look like this? The dollar, the TNX. It's just chop at the end of the day. Until these levels break, just like the SPY, we can expect more volatility and more chop. Let's go ahead and move on to the smaller time frame. We're going to work from a top-down approach. This is the daily. We identified supply here. You can see this gray box. We could make that red, but on this chart, I'll just keep it gray. You can see that supply has worked very, very well over the last several times that prices moved up there. Underneath that, what you may not see is that we have trendy edges. So once again, the trendy edges are working really well. As far as the daily is concerned, you did close underneath the 50 SMA. That's going to be this pink line here. And again, that's just a simple moving average, a very common simple moving average that a lot of traders use. And I put it on here for reference for those who use it. One thing that you're going to see a theme of is this blue line here underneath here. This is one of my indicators. This is the yearly trendy edge. And I've talked about it all this entire time. Going into this year, before January even came, I knew that I wanted to be really safe and understanding that I would follow the trend to the upside as long as we are above this level. That level there is 6,035. This should sound very familiar to you. Matter of fact, for our 2025 projection, I said that I was bullish on a much deserved pullback. But if price wanted to stay above the yearly edge, I would remain bullish and ride the trend. If for some reason we close under the 60.35 level, I am risk off until we can prove that we can get back above. Now understand this. This is a really high time frame level. And so what's happening is that we will just fluctuate over and over around it again until we can create some sort of big base and make higher highs. Then this will become the low of the year and will continue to move up. However, if we close underneath here several times, this will become the top of 2025 until it's not. So the projection is on higher time frames when we're underneath here that price could continue sideways to down. Very, very big level. It's the over under on a weekly basis. Are we over it? If we are, I'm risk on with caution. If we're under it, risk off, but also willing to buy smaller or shorter time frame demand zones for intraday type trading. Okay, let's go ahead and move on. Oh, before we move on, sorry. We do have these trigger longs and so forth. Again, I teach in the room how to identify if you want to get into these. Okay, just because there's a line there and it says trigger long does not mean we close our eyes, make a wish, and take a trade. That's not how it works. We look at certain things on our time frames, on short or smaller time frames. Okay, let's go ahead and move on. We'll go to the 4 hour. So this was the same blueprint that I gave you guys when Jerome was doing the FOMC. You guys can see that it's worked really, really well. The supply zone worked again. And as far as I'm concerned, look, you know, the intraday charts that I'm going to provide to you Monday through Friday, we'll have other zones through here that we want to get long, where we want to get short and so forth. But again, my focus, and I really want to make sure I hit this home with you guys, is going to be these bigger levels. We're just going to basically do this until we don't. All right, so the next thing that I want to look at is the Nasdaq futures, and then we'll look at Bitcoin, and then we'll finish off with the VIX. So let's go ahead and click on Nasdaq. Same thing, let's go over to the weekly. Let's talk about the weekly chart really quick. So this is the bull channel. We came in there this past week. It worked really, really well. Notice up here the big level. Once again, the yearly edge continues to be that major level where you're seeing some sort of sell off. So again, we are sideways to down, but choppy within a big bullish range, but currently sideways to down until we can establish a base above this big level. Again, the trendy yearly edge. Remember that. So what do I want to see there? I want to see at least 2 to 3 weeks above here. Okay, something like this. Then this becomes the low for the year until it's not. Right now, this is a very important level. It comes in around 21,885. Okay, so just keep that level in mind. As far as this week is concerned, we did close just above the 9 EMA. That's a positive for us bulls. We also held the 38.2, also positive for the bulls. Let's go ahead and go into the daily. You'll notice here we came into the supply zone. Once again, not only did we get a trendy turn signal that helps us identify, hey, we probably don't want to be long here. Prices then came down into the 50 SMA, a lot like the ES futures. Price did close below the 50 SMA. Far as trigger longs, you guys can see those on here. And just like I said on the ES futures, this is not something you just close your eyes and wish and hope that it works. We look at levels on a smaller time frame, and then we identify whether we want to go long there. Let's go ahead and go now into the 4 hour. Same thing here. You'll notice that our levels are working really well. The major levels for me are going to be this green box and this red box. Everything between here is more intraday trading, as I think we're just chopping. My overall sentiment on the Nasdaq and the ES futures is, you probably guessed it, is neutral to bullish. And I say that because so far the smaller dips are being relentlessly bought. There are times where I just wish we would sell off really hard because I am looking for a better deal. All right, so that brings us into Bitcoin. What is going on with Bitcoin? Well, again, you're going to have a lot of traders who focus on the news and all the other nonsense, in my opinion, when really all you need to do is look at structure. Overall, this was a monthly inside and up formation. We closed there. After a buy signal, we then pull back. It's just like I teach you guys on a 5 minute, on a 30 minute. When we get the buy signal, expect price to come back a little bit and digest. So what I do like here on a positive note is that we're going sideways. And after a big run, there's a couple things that can happen. You can have a really sharp sell off into the demand zone so we can catch up with the EMAs, or sometimes what happens is that price just goes sideways. And as we go sideways and we fluctuate in the ebb and flows of highs and lows, this actually starts to creep up the 9 EMA even closer. So what we like to see, what I like to see, is not a lot of space between current price and the 9 EMA. With it doing the sideways motion and a little bit of volatility, it's actually allowing for the 9 EMA to creep up a little bit higher and higher. That's not bad. Just again, we're just consolidating and chopping. If for some reason we do break down, I don't care. I've already forecasted that I want to buy down here in these levels. This is actually for me and my crypto portfolio, this is where I want to add more. Okay. Sometimes when I think we talk about big picture and taking trades for a long period of time, traders who are just focused on very small time frames, they just don't get it. And I hope that you take the time to understand that the bigger time frames can really help you. They can help you relax, they can take a lot of stress out, and you can come in and you can sometimes chuckle and be like, well, no reason to freak out here. Matter of fact, when you start to see prices pull back, you should start to get pretty excited because, listen, over a long period of time, the market just continues to move up. And buying the dip has worked for many, many years. So we want to continue to be on that same track. And it's always the same thing. As prices go down, investors get fearful, then they sell, and then they push price right into bigger money. So be patient. Again, I'm speaking to people who are more on the investing side. But if you are a trader, what can you take from this? you can understand that the big picture is still very bullish, and there are smaller time frames that we can use when it comes to crypto or Bitcoin to get long in. If you're interested in those, just ask me in the room and I'll be happy to explain to you where the smaller levels are on the smaller time frames. Okay? All right, let's go ahead and move into the VIX. And we'll finish here and then I'll give you my overall sentiment for everything. So the VIX, the big thing here is the levels work really well um, that I provide. So this is like a demand zone down here. This is where I want you to think, hey, things can start to get pretty crazy. And they do, right? Boom, we get a lot of volatility. Pricing comes back. We're just kind of chopping around here. We have a turn signal here, which any other time, right? If we're on a turn signal, I'm looking for prices to move up. So in this case, there's a possibility here. If we get above, look, there's that damn level again, the yearly edge, which happens to be around 1682 or so. If we get above there, look out. There could be a lot of volatility about to come into the market again. So go ahead and create your alerts above there. And if for some reason we break down again towards the 1384 level, 13 and some change, just understand that volatility can come in there as well. Okay. Overall, let's talk about what we just went through. So the SPY on the quarterly looks good. On the weeklies, it closed above the 9 EMA, which is a bullish sign. Earnings have, we have a lot of great names out there potentially that can do really well this week. I'm very excited about that. On the QQQ, again, bigger picture looks great, but also, the weekly just closed above its 9 EMA. So we're basically sitting on a level where you would want to see tonight that we can gap up, that bulls can hold that 9 EMA. If we close below, I gave you those levels. Okay. The dollar, we're stuck between two opposing zones. The 10-year Treasury, same thing. We're stuck between two opposing zones. The skew is at 166, which means extreme caution. But again, don't just use the skew to make any decision. Line it all up together, and what we start to see is the fear and greed is at 39. People are just starting to get a little bit fearful, and I think they should be. The skew says, hey, watch out, yellow flag. The fact that we're just sitting on the 9 EMA, just sitting on it, we're not far above it, says, hey, be careful. And then as we move on into the futures, the same thing. They represent the ES, right? And the SPY, which is the Nasdaq and the QQQ. It all says be careful going into this week as we can see a lot of volatility. Again, folks, this is the bigger picture. Every day at Simpler Trading, we are providing the intraday look, and we also have a lot of charts that we're looking at just for day trading purposes. Now, when I say day trading, I'm not talking about just flipping in and out within an hour or something like that. We have swings on. Melissa's taken a couple swings with you guys that have done really well, and she puts them on this past Thursday and Friday. So, looking forward to seeing how those pan out. And then also look forward to my Tesla. I will be doing a video for you guys on that. That's a hot name, and everybody's kind of interested in what it's going to do. So I'll make a video after this. And once again, guys, I really appreciate you going into this week. Let's just stay neutral. Let's stay on our toes. We'll use our intraday charts, and we'll have a blast. Talk to you soon.